Hello, hi, namaskar to all the students, to all the viewers of this particular channel. I being Sudhakar JP, having almost 25 years of teaching experience, my dear student. Now I'm going to teach you the problems on inventory valuation. Already we have completed three classes in your inventory valuation. Now we are into the class 4, my dear children. I'm trying by my level best to make you understand regarding the problems on various different chapters in your CA Foundation accounting, my dear student. Now, in this particular session, let us understand, let us learn the problem on inventory. This question is asked in January 2021, my dear student, for how many marks? 5 marks. As I told you, there are two methods of ascertaining, one by statement method, another by ledger method. But I prefer to go for ledger method. How the ledger should be? This is your trading account. Fine. Here we will be having opening stock, purchases, direct expenses. Here we have a what? Sales on the credit side, closing stock on the credit side. Gross profit will be on the debit side. Okay. Here we are going to ascertain either opening stock as a question mark or closing stock as a question mark. Any one among the two will be a question mark. Okay, shall we start the solution? See, my dear student, before reading the problem, let us get ready with the format. Okay, let us get ready with your separate format. Okay, now let me start. From the following particulars, ascertain the value of inventory on 31st March 2020. What we have to calculate? We have to ascertain the stock. This is a problem number what? It is a problem number 6, right? Problem number 6. What we have to calculate? We have to calculate stock on 31st March. When it is on the date of 31st March. We have to calculate stock on the date of 31st March 2020. So you write stock on 31st March 2020 is question mark. Fine. Let me read what actually the sentence is. Stock on January 2019 is given. It is of how much? 3,50,000. So you write stock on 1st April 2019 an amount of rupees 3.5 lakh. Okay. So this is a particular message. Usually what I suggest the student is better you mention these two dates, because with the help of this we can identify, we can analyze what stock we have to calculate. Now you have to calculate the stock on 31st March 2020. It means your closing stock is question mark. Stock on April 2019, it means your opening stock is given. Okay. Now let me read the problem. What actually given? Purchases is given, sales is given, manufacturing expenses is a direct expenses which comes in what account? Trading account. Selling and distribution expenses, it is a indirect expenses. Administrative expenses is a indirect expenses. These two expenses comes in the P&L account but not in the trading account. I repeat, selling and distribution, administrative expenses are the indirect expenses. They comes in your profit and loss account but not in trading account. Fine. At the time of valuing the inventory on March 2019, see my dear student, March 2019 is nothing but April 2019, right? Just one day after that. A sum of 20,000 was being written off on a particular item, which was originally purchased for 55,000. This belongs to opening inventory. You put a star mark. When you concentrate, please listen with a lot of interest. What happened here? A sum of 20,000 was written off on a particular item. Was written off means you have already subtracted, which was originally purchased for 55,000. See, you have purchased for 55,000. You have already written off 20,000. Written off out of what? Written off out of inventory. Out of inventory means out of opening inventory. Then what is balance left out? Balance, it left out 35,000. What to do? It is to be subtracted out of opening stock. Did you understand what I told? I repeat my explanation. At the time of valuing the inventory, means opening inventory on March 2019 is nothing but April 2019. A sum of 20,000 was written off on a particular item. Already you have written off, already you have subtracted. How much? 20,000. But it was originally purchased for 55,000. You have purchased it, it was purchased due by paying an amount of 55,000. Out of that, only 20,000 was written off. So balance, what we have to write off is 35,000 from the opening stock. Fine. Then next, and these goods were sold during the year for 50,000. These goods are sold means here sales we have. Out of the sales we have to subtract 50,000, put a star mark. What to do this 50,000? This 50,000 is to be subtracted from sales. Okay. Now, except the above mentioned transaction, gross profit is 20% on sales. Gross profit is what? It is a gross profit 20% on sales. Okay. Shall we move on to the solution? See, my dear student, now let us write, now let us get ready with the format of trading account. As I told you, we can find the value of stock under two methods. One is by preparing the trading account, another by preparing a statement method. But I prefer to go for trading account method. Fine. Shall we start? See what happened here. Inventory on April 2019, 3,50,000. So you write to opening stock or opening inventory. How much it is? 3.5 lakh. You take 3.5 lakh in the inner column, less. Out of this, what we have to do? We have to subtract. 20,000 was already written off, purchased for 55,000. The balance to be written off is 35,000, less balance to be written off. Out of 55, you subtract already 20,000. So you take the balance of 35,000. Now it comes to 3,15,000 is your opening stock after adjustment. Malum, did you understood? Like that we have still another 4-5 problems, but listen with a lot of interest, my dear student. Purchases during the year 12 lakh. Where to record the purchases? Purchases comes in the debit side. How much it is? 12 lakhs. No other adjustment for purchases. Sales is how much? 18,50,000. Out of the sales, what we have to do? These stock, whatever they said, it is being sold for 50,000. This is called the sale of abnormal items, my dear student. Because it is a written off, it is not a normal goods, it is a abnormal goods. They are not regular goods. Now this 50,000 is to be subtracted from sales. Sales is 18,50,000. So you take sales of 18,50,000 less sale of abnormal goods. 50,000 you subtract it. Take 18 lakhs in the outer column. Hua? Then you see what happened. Manufacturing expenses, the direct expenses 1 lakh. To manufacturing expenses as a direct expenses we have to record 1 lakh. Then Selling expenses, no, it is indirect. Administrative, no, it is indirect. At the time of valuing the stock, inventory is taken, sales is subtracted. Now the gross profit is 20% on sales. They have given gross profit, right? So now let us write to gross profits. How much, my dear children? It is 20% on sales. 20% on sales. You know what? You know sales. This 18 lakh is your sales. Profit is also given on sales. So both are sales. Matched. So then what we have to do? Take that 18 lakh, 20 by 100. It comes to 3,60,000. Fine. Now you close it off. Work out the total of the debit side. The total of the debit side comes to rupees. When you add all these things, we are getting 19 lakh. 19 lakh. What? 19 lakh. Wait. I work out answer. Here we are getting 3,15,000 plus 12 lakh plus 1 lakh plus 18 lakh 3,60,000. It comes to 19,75,000. Subtract it. The answer is closing stock. As a balancing figure, it comes to rupees 1,75,000. Total comes to rupees 19,75,000. See, this is how we have to do the solution for this particular problem. I hope you got it right. Since the profit is given on sales, even you have a sales, since both are matching, we have to take 20 by 100. Okay. So let us move on to the next problem in the next video, my dear student. Thank you. Take care. Bye.